The Choppiness Index helps distinguish between trending and choppy markets. It does not indicate market direction, though it can confirm directional movement towards a trend in some cases. To an extent, it can also provide detail on the status of a trend and volatility in the market. Indicator values range from 0 to 100. High values at or above 61.8 are said to indicate the market is moving sideways in a choppy consolidating manner if values continue to remain over 50. When below 38.2, the market is said to be trending, and it will remain that way while staying below 50. Falling towards the 0 to 20 range indicates highly directional market movement and normally isn't sustained for long. Thus, it can hint at a slowing trend. We will see various uses of the Choppiness Index, along with preferred conditions for its application, and cases where it fails and/or has limitations. A wide range of real chart examples will be covered from various time ranges, no matter when you watch this or which particular charts you choose to apply the Choppiness Index on. Information presented in this series can be of use to you.